Hello, welcome to my Swing Trader Trading channel. Do you have a stock portfolio of large cap, mid cap, and small cap stocks that was started in April of 2023 and is up 83%? Well, I do. Let's take a look. Today is May 2nd, 2024. We're here to review Quant Alphas. The update was made today to add and remove a stock. Let's take a look. Here I'm in my live scorecard. You can see I have 6 model portfolios. Quant Alphas is up as number 1, 83% increase. And here is the benchmark I compare against. Let's take a look at Quant Alphas. Here's a spreadsheet which tracks it. It began in April of 2023. As you can see, initially, performance of the portfolio was behind its benchmark, but this only lasted 1 month. And then in May, it went ahead, and as you look across, ever since then, it's outperformed the benchmark by a wide margin, kind of steadily increasing over the months. Right now, it's at 83%. It's down a little bit from month end, with just April month end. It just happened. We're going to go into the reasons why for that here in a minute. So let's take a look at the portfolio. Alpha Quants is made up right now of 24 stocks in the active portfolio. This particular update, we added Core and Main, this one here, and we also removed MI Homes. It's right here. Now, Core and Main, we're going to take a look at that. This is the one that was added. It is a mid-cap stock, as you can see. It is the type of stock that is an industrial distribution stock. So going back to the portfolio, let's take a look at a couple interesting areas. One is SMCI, Supermicrocomputer, right here. They just had an earnings report that came out, and the stock took a bit of a tumble. We're going to take a look at that. So here's Supermicro. You can see yesterday it did a bit of a tumble. Looks like it's trying to come back today, but we'll see. It is a computer hardware company, as a lot of you know. And Supermicrocomputers earnings, we're going to take a quick look at it. It's very interesting. The revenue had a really big increase of 200% year on year, and you always like to see that. I think the problem is that the so-called experts' estimate of the revenue was, I believe, $395. So it was disappointing from their point of view. It missed the estimate. Oh boy, you can't do that. Now, an estimate is just an average of these so-called experts' guesses on what the revenue is going to be, as long as they also guess on what the earnings is going to be. So it's a very subjective thing, and the fact that you missed their estimate by itself, to me, is not a horrible thing. You have to look at the results of the company itself. Being up 200% in revenue year on year is pretty good. And here, if you look at the earnings that they're showing, it also had a very big increase, 308%. Gross margin was pretty good. And as you can see, some of the other parts were not so good. A negative cash flow. You never want to see that. But here in the future outlook, which a lot of people pay a lot of attention to that, you'll notice that in the full fiscal year guidance, it was raised substantially. But yet, even with this very good on the surface report, it was hammered. And whether the stock is going to rebound or not, I don't know. I just know that I look at the numbers they reported; they were pretty good, so I'm not too worried. So let's go back again. Let's look at another one that also reported within the last couple of days. That was Powell Industries. And in this one, it is a electrical equipment and parts company. And if we look at Powell Industries, the same kind of information about the earnings report, you can see that it had a big increase in revenue from the previous year. Its net income exceeded the estimate by quite a bit. Its earnings went up quite a bit. Gross margin improved. Backlog remained stable, which is important in a company like that. New orders, pretty good. Cash and short-term investments rise substantially. So again, what happened with that company yesterday? It was rewarded. And I think there was another earnings report back 1 or 2 quarters ago where they had an earnings report that the market or the Wall Street liked and had another big increase. So this is on top of that. So this stock's doing really good in our portfolio. As you can see, it's up 219% since it started. So let's take a look. I always like to do this now with their videos. Let's take a look at what's in the portfolio. So when I go over here to take a look at the different types of stocks in there, I'm not going to read the names because there's too many. I think there's 24. But I like to look at the sectors. One, communication services, consumer cyclicals. You can see there's several of those. A couple energy, a couple financial services, 3 healthcares, some more industrials, and technology, 4 stocks. If we take a look at the market cap that these are in, you see there's 2 small caps, clearly small cap. A couple that are kind of in between small and mid cap here. A whole lot of mid caps down through here until we get about here. App loving, and then these are large caps. So it's quite a large variety here, and that's one reason that I choose the EQAL index to compare against, because that's an equal weighted index over a large number of stocks. In the volumes are pretty good. You can see the smallest one here is Membach Holdings, 119,000 per day, but the price is $45 a share, so that's a pretty good liquidity, nothing to be concerned about. So let's go back and take a look at the information about the portfolio. Now, I'm going to cover some of this in the blog post, this part right here, this criteria. So I won't talk about it now, but I will talk about it then. I have a paid subscription to a Quant website, which lets me see the Quant ratings for all these stocks, many thousands. It's called a Quant score. They have themselves done a back test on using the Quant score for having long-term portfolios over the years, and they're saying that they have some alpha if you use the Quant scores using certain criteria. So I've adopted what they've done there and changed it to my own custom way of doing things. I don't do it exactly the same way. So I've created a portfolio on the basic premises of what I saw on the website with the Quant scores and tweaked it to my way I think will work good. I do count the dividends that the stocks accrue, and plus the dividends that the index that I mark against accrues, because these are very long-term stocks. They're going to be in the portfolio for many months, and I've chosen to use the EQAL index because it's equal weighted over 1,000 of the biggest stocks, which would be large cap, mid cap, and small cap, as the best representative benchmark. And I already showed you a kind of mixture of large, mid, and small caps we have in there. Let's take a look at the blog post that just went out to my subscribers on my website, swingtrader.trading. The updates to the portfolio made this morning. There was 1 new add and 1 new removal, as we already covered. There's a total of 24 stocks in the portfolio now. The portfolio uses Quant scores as a chief factor. Also, the criteria below is used. No microcap stocks, high liquidity, USA or Canadian headquartered only stocks. Twice a month I add to the portfolio. I will not use subjective criteria for stock selection. I use the Quant rating only as the final tiebreaker. When a remove signal is received, I remove 100% of the stock. I will not add any stocks from these particular industries. And you can expect that eventually be 30 to 35 stocks will be in the portfolio. I will try to implement policies that are going to keep that number from going much above 35, because I think the portfolio would just be too big if that happened. Holding period is expected to range from 9 months to 2 years. So I added Core & Main. We already mentioned that. Just to refresh, here's Core & Main, 11 billion market cap stock. Here's a little bit about what it does. Distributes water, waste, storm drainage, and fire protection products. It's headquartered in St. Louis, and according to this, it was founded in 1874. So it's a kind of a long-term company, been around a long time. And as you can see from the 1-year chart here, it's been doing pretty good this year so far. And so continuing on, we removed MI Homes. I got the sell signal. It was up, I think, around 14% since we added it last year sometime. The portfolio is up 83%, as we already covered. Standout performers in the portfolio, of course, include SMCI up 576%. Powell Industries up 219%, and ANF, which is Abercrombie & Fitch, 139%. So here's, if you want to go back and look at the portfolio details again, you can click here. If you want to go to my YouTube channel, you can click here. Here's my spreadsheet information, quantified into a view here. And this is all the model portfolios I update. I have 6 of them. Quant Alpha is my number 1, but I have several others that are pretty good too. Bi-weekly swings up 63% since the beginning of 2023. And it goes down from there. The one that's up the least, as far as compared to the benchmark, is mid-cap flyers. And here, if you wanted to look at the back tests for the 5 model portfolios that I have back tests for, they're right here. And finally, we have a portfolio summary. I just basically summarize what we did. I think the key thing for this particular update was the earnings reports for SMCI and for POWL, and how Wall Street punished one and benefited another. And it does happen. It's nothing to get concerned about. As long as the company itself is doing okay, then Wall Street's 1 or 2 day knee-jerk reaction because it didn't beat their estimate is, to me, not a concerning thing. That's it. Thank you for listening and watching. If you'd like more information about my website and how I pick my stocks for my portfolios, you can click on this link here, Criteria for Stock Selection, and it will cover what's excluded, the fundamental data used, equal weighted starting value, dividends, and back tests. And if you would like to get the latest updates in my model portfolios as quickly as possible, go to my website and subscribe. It's free. Thank you. Hello, I guess that wraps up the video for today. I hope you got some value from it. If you did, please subscribe to my channel. And if you did like the video, give me a like, and also make a comment if you feel you need to or want to talk about something. Thank you.